Hello there, Maverick Currency traders. This is Rob Reinhold. It is June 10th. Let's jump into the market. In today's session, we're going to talk about the news of the day. We're going to go through the commodities. We're going to go through all the currencies, score them from +3 to -3, and that tells us where to go hunt.
All trades and analysis in this video are intended for professional traders only. This content does not constitute financial advice and is for educational purposes. This video is being released after a short delay due to Compliance Department review. Maverick members receive this content immediately as part of their daily trading resources. If you're ready to level up, consider joining Maverick Currencies. Our traders trade firm capital and keep 70 to 80% of profits. You bring the skill, we provide the backing. Let's get into today's market recap and see how the pros are trading the currency markets.
All right, let's go ahead and just start off with some of the news of the day. We had two bits of news. The U.S. claimant count change was horrible. Horrible. They were expecting like 7,000 jobless claims. It was like 30,000 jobless claims. That's a very large jump. We did see the pound move down, but we're in a low volatility environment at the moment. So it was down like 1/3%. Not that big of a deal. On the positive side, we had Secretary Letnick says that the China and U.S. negotiations are going very well. The market liked that quite a bit and stayed bullish ever since that news came out. What did that mean in the world of Forex? Take a look at these numbers. They're just not great. Now this week, we said we liked yen short, and yen has been a decent short. Here's the problem. The market isn't a volatile market at the moment. So the most you're getting is like 0.5%. I mean, that was the best trade you could have made today. Well, I guess pound CAD could have been better, but if you were in CAD yen, you had the ability, if you hit it perfect, to make 0.5%. That's not a big move in a day. We usually like to see several of these currencies over 1% a day for a good trading day. We've been talking about this for the last couple of weeks. I've been talking about how this first 2 weeks in June is typically a lot lower in volume and volatility in the stock market. Everything is just compressed. The markets were compressed. They ended up going up about 0.5% today. You can see crypto up 1.3. Oil had a little bit of a sell-off. In the cryptos, there is one trade I want to talk about. Ethereum had a nice breakout, and it's been something that I've been talking about, as it's really been the only crypto I like trading in a really nice high base. We'll take a look at that breakout, and we'll talk and see if it's got more legs to it. We take a look at where we are in equities. We're at a +3 market. We are broken out of everything. But look at these candles. These are not huge candles. It's not huge volume. It's just creeping higher. We are about 1% away, 1.1% away from all-time highs. I think we take about 2 to 3 days, maybe 4 days to creep up there, knock on the door, maybe back off it a little bit. Everything in this market is telling you it's a slow grind higher. That means that if you're looking to get in and get out, you should be in all cash. That's not where we are right now. You have to be taking these positions where you understand you're going to have to be in them to 2 to 3 days just to make 0.5%, maybe 0.7%. If that's not the game you want to play, then you cannot be in the market at this moment. Tomorrow we do have the CPI report coming out of the US. So if you were looking for something to maybe give a little bit of volatility to the market, that's a very good possibility tomorrow morning, 8:30 a.m. Eastern Time. Let's take a look at where currencies are. I'm just going to blow through these velocity scores very quickly. I'm going to start with the yen. Yen is trending down. EMA is down. Everything's down. Yen still looks like a good short. That being said, we like yen better off these little bounces. Off these little bounces, that's a better short. I'm not saying it's a bad short here, but we are around some support. Yen short is absolutely the play this week. Dollar, flat. Swiss franc, flat to slightly down. Again, there's no velocity here. Euro, flat. Pound's got some velocity to the downside. And you can see this bounce that happened, 4-hour chart. So we had about 12 hours of a bounce here. It failed miserably. So you could actually put pound on that list of things to look to go short. CAD going nowhere. Aussie creeping higher. So that is a currency that actually looks like I want to buy that one. And Kiwi also creeping higher. We go into the cryptos here. Bitcoin is putting in a nice base here. Came all the way up to 110, backed off that. It looks okay, but is it the best crypto out there? As you can see, we've got a lot of overhead resistance up in these areas. I actually really do like Ethereum better. You can see nice breakout. Hasn't quite broken out yet, but it is almost there. This nice breakout of a 2-month base, I think this is where you want to be. This is likely the best trade out there at the moment in all of the markets. When we look and see, okay, what's moving at the moment, I like pounding yen to the downside, but again, it's not going to be a fast rundown. I like Aussie Kiwi to the upside. They're not running, they're barely creeping higher. To me, the best trade out there is Ethereum, so let's go ahead and take a look at that chart, and then we'll take a look at some Forex trades as well. Here's Ethereum on a daily chart. Beautiful high base, and I've been talking about grabbing things at the bottom of the base, around 2,500. I know I've nibbled a couple times there. So now we got a breakout. If this breakout fails, we're not screwed. If we bought it all up here at 2,800 and it fails, yeah, you're going to get screwed and you're going to have a loss and you're going to get stopped out. But if you've been nibbling down here in the $2,500 range and then you took another position up here, your dollar cost average is down at like 2,600. You're super comfortable waiting for this thing to move higher. Is it too late to get in this one? I don't think it is. I don't think it is. The big question is timing. Where's the timing here? We do have some resistance up in this area. I would love to get a pullback, but it does not look like it wants to pull back. This kind of price action, just like we saw right here for 8 hours, refusing to go down. We're getting the same price action here. It's telling me that if you try to wait for a pullback, you're likely going to miss it. So again, this is where dollar cost averaging and pyramiding is great. Take a starter position. If you're not already in it, if you're already in it and you want to add to it, add to it. I think this looks really good. Question is, where is the upside on this? Once we break through this 2,800, I think it's up to about 3,200. So there's some nice meat on the bone on this one in Ethereum. And as far as pure relative strength and weakness, pound Aussie is actually going to be the place where you're getting the most negative divergence. This is the daily chart, and you can see that we've had 4 or 5 down days and just a really nice acceleration to the downside. The question is, where's the entry? Where's the entry? Here we are on the 4-hour chart. Same thing. We're not getting any sort of bounce to sell into. Looking more and more like a low base. I don't love this trade. It's not my favorite one ever. I actually still like the yen more than the pound. And you can see this is Aussie yen, and we're seeing the same thing. The Aussie yen refuses to go down. And if you get these little pullbacks, these are the opportunities. We pull back from 94.50 all the way down to 93.90. That was a great little pullback to buy into. So you're only going to get, 1 or 2 red candles at best in order for you to get into it. I think this is where you want to be hunting. Kiwi yen, stuff like that also looks decent. We do need to be realistic about where the market is. Forex volatility is low. It's low. If that's not your cup of tea, don't trade. Don't chop your account up, trying to click buttons thinking it's going to move tomorrow for no reason. Maybe if the CPI is wild, maybe it will move. If the CPI is not wild, you're going to be looking for 20, 30 pips at the most in Forex. If that's not the game you want to play, then don't play. Because what's going to happen is you're going to get pullbacks, you're going to get stopped out, you're going to take 20 to 30 pip losses trying to make 20 to 30 pip gains. It doesn't make any sense. Just sit on your hands. Cryptos, I think the cryptos actually look like they've got more volatility in them, more movement. And I do like that Ethereum on the daily chart of a high base breakout. So I think those are the trades. There's not a lot out there. We will likely see this flat market probably all the way through the Juneteenth holiday next Thursday. I think we're going to be in this low volume, low volatility environment for a while. Remember, trade the market in front of you, not the market you want it to be, the one that's in front of you. Be realistic and protect your capital. Bye, everybody.